if I can start recording. I'm actually waiting for a guy, and then we can start. Okay, all right. So the first thing I'm gonna do is I will, where is it? I will open up my trading view chart.
So what do you use? Do you use like MetaTrade for?
Yeah, I use MetaTrader as well, but obviously I use trading view for my analysis because it's
Yeah.
kind of much for certain part of my analysis I use trading view. For some other part of my analysis I kind of use MetaTrader at the same time as well. All right, so this is my MetaTrader chart, and this is what I'm talking about. Look at this. Can you see where it says USD? Can you see my
US.
chart?
Yeah, I can
Right,
see US.
it says USD is 7.3, right? And then when you look at others, they say 6.9, 5.7, 5.6, whatever, whatever. And then pound says 0.1.
Yeah.
Okay. All right. So this is what I'm talking about. In terms of strength, the dollar is very powerful. What that means is the actual thing that is happening inside the dollar right now is people are pouring a lot of cash, a lot of dollar onto the dollar trade because of the kind of interest rates that the government is offering, right? And this has been ongoing for some time now. The dollar trade has been ongoing for some time, which means dollar has got a significant amount of strength. You cannot go against that for whatever reason at all, irrespective of how good you think you are, because that is a trade um, that is ongoing, and you are not in control of that, right? There's so many other economic factors that are in control of that. So it says to us that the dollar is 7.3 and the pound is 0.1. All I need to do on a day like this is go to the pound yen chart, okay? And I mean, sorry, pound dollar chart. On my pound dollar chart, you can see almost for that day, the price is moving all the way down, all right? Sometimes you find yourself in a position whereby this does not occur for more than 30 minutes, okay? Right, like on this, rather than on this day now, this is occurring for like almost the whole day, right? So within that period of 30 minutes, if the reading shows you there's a significant divergence between one particular currency pair and then another particular currency pair, then straightforward, you know that the trade of that particular day, right, irrespective of whatever currency it is, that is where the trade is occurring, which means a lot of cash is going into buying dollar, and then a lot of cash is going into selling pound. There's no two ways about it. So these are actual cash trade, which means real cash is what is actually operating in there. And what do I mean by that? It means the economy of United States is booming, and then the economy of the Great Britain is declining at that particular moment from a day trading perspective. Okay, bear with me a second, please.
Okay, take your time.
Okay, so in terms of today, what I actually wanted to look at is I wanted the guide I requested for the training to dictate Doji, but for one reason or the other, he still hasn't joined us because it's new as well. And I'm kind of breaking down the, what's it called, the training in a way whereby it doesn't miss as much because he has been troubling me from the time that I wake up for the last couple of few days now. But unfortunately, for one reason or the other, I let me see. I don't know whether he has joined in. Hello. All right. It's not recording. Link here on it's on Telegram, it's on your WhatsApp. So, and I've started. I don't have much time, Jelly. Yeah, that is the link. It's in Lori and on. I'm waiting for you, man. All right. I do, J. Okay. So sorry for the interruption. Let's see. Oh, trading view is currently down. Something isn't doing what it's supposed to do. Let's see. Let's see, all the other trading view is down. Let's see again. Maybe they're doing some kind of maintenance, but it's open there. All right. So the actual thing that I'm going to be looking at today are the dollar pairs. And I'm going to do that in a way whereby I load one of my this way open. Okay. This site is doing some maintenance. Okay. We are opening little by little, and this guy, is my screen shared? Yeah, my screen is shared. This guy is finding it difficult to join through for one reason or the other. Maybe it's the Nigerian network.
What time is it there?
In England, it's 9:16.
Morning?
Yeah, 9:16 in the morning in London. Obviously in Nigeria, it's about the same time as well. Okay, and right.
You're living in London?
Yeah.
Okay. It's 2 p.m. here. 2 a.m.
Yeah, no, it's late in the night. 2 a.m. rather.
Yeah.
Right, 2 a.m.
Yes.
Okay. So if you look at my chart over here, I have the first one is a British pound dollar, euro dollar, Australian dollar, New Zealand dollar, and obviously I have dollar card, and then I have dollar Swiss, and I have dollar yen. Okay, and on my charts, if there's one thing that I have over here, which most people don't lay emphasis on, is called the US dollar currency index. All right, so what that means, and these are weekly charts. In fact, let's start with the monthly charts, which is the way that I like to view the market. You can see the US dollar index is actually what summarizes every single thing that's happening in the dollar, okay? And I will be discussing 5 major points today. I can't find this guide. I'll be
There is
discussing,
someone
say
on
that
the
again.
group. There is someone who got in on the Zoom, except me and you.
There's someone.
Yeah.
Oh, yeah. So I think he's in now. Okay. Thank you.
There is 4 people, I think.
Yeah, there's 4 people now. Yeah, I can see that. I hope everyone can hear me. Okay. So I will go almost like as if I'm starting again, which are the points which I haven't discussed. The number one rule of trading the foreign exchange market or trading anything literally for people who are just starting is to start very small. Okay. What I mean by that is your position size needs to be very small. If you do not abide by that rules, you're going to end up suffering, and that suffering will make you lose hope. And when you lose hope, you will equally forget about trading or doing the most lucrative thing that you can ever do with your life. All right. The essence of starting small is because if you make a mistake, then the loss, which is the gratifications, there are 2 gratifications, the gratification of loss and the gratification of profit, irrespective of however how old you are or what challenges are in front of you or what you actually want to achieve by trading. If you do not put into consideration the concept of starting very small, and I mean the barest minimum, to even make it look like as if this is a joke, right? You will suffer significant amount of loss that if care is not taken, you may find it difficult from recovering back from it, okay? Because once your money is lost in the market, you may find it very, very hard of retrieving it back, all right? So number one rule for me, I would say stick to a very, very small position when you are starting. It is very, very important. And when you stick to a very, very small position, you will find it easier to navigate through the markets. And bear it in mind at the same time as well, there is no reward that you gain from the foreign exchange market that is truly yours. And the loss that you encounter from it at the same time as well, yeah, you may say that you've lost your money, but it's not truly yours at the same time as well. And the reason why I said this is this. Over the last 16 years that I've been trading the markets, I realized that when you encounter a trading session and you make some money, until you actually withdraw that money into your bank account, which means the profit that you make into your bank account, and then probably take it out of your bank account and use it to do whatever you want to do, that is when it becomes yours. The market can be very, very tempting, right? And the market can play on your emotion in a way whereby you will be thinking you are in control, but it's your emotion that is in control. And what I mean by all this is simple. Because the market runs 24 hours a day and you can always come into it at any point in time, which means if you do not set some level of discipline for yourself, because you know there's an opportunity to make money, and we human beings, we are driven by whatever we can make, you will find yourself being tempted to go into the market all the time. So I don't want to bore you with so much psychology of trading, but the most important part of trading that you need to understand is the psychology of it. All right. So The way that I've detailed it is I've said two things now. I've talked about your trading size, right? And I've talked about how emotion play a great role in your trading decision. Okay, note those two things. If you can write it down, write it down. If you cannot write it down, learn it by heart. All right, and then that is even before you even start to build a strategy at all. You need to know what risk management is, and then you need to know what psychology of trading is before you even delve into this field at all right? If you do not have an understanding of that, you will find it very hard to succeed, okay? Because this is a gradual growth process, all right? You cannot get into this business in one day. Even if you make $100,000 that one single day that you gain from a beginner's luck or whatever you want to call it, and you think you are the king of this market. No, you are not. And I would appreciate if you can follow through with your dreams and every single thing that you want to achieve with this. It is challenging if you do not follow through with simple little rules of starting small, rules of understanding the emotion, and rules of setting some kind of target. All right, so I can say to myself on daily basis, I want to go into the market and make £100, okay? And the market will surely reward me that £100. And when I get that £100, I just want to come out of the market and go and do other things. Maybe I make that £100 within 5 minutes. Maybe I make that £100 within 20 minutes or within 30 minutes. The rule of thumb, irrespective of however how good you are, is to leave your desk once you've achieved your target. So we've talked about three things. And the reason why I'm recapping is so that it can stick. Number one, small position. Number two, the influence of emotion. And number three is your target. All right. Once you attain your target, just leave the desk, go and do other things. There's so many other things to do out of life. Number four now is what kind of strategy, how do I look at the market? All right, so the number one thing that I want to talk about in looking at the market in terms of strategy is understanding the power of strength and weakness. Okay, can everybody see this? It says US dollar currency index. Okay, and what this means is this: every pair on this chart, yeah, I am recording it as well. I can send you the recording. Every pair on this chart is dollar denominated: British, US dollar, Euro, US dollar, Australian, US dollar, New Zealand, US dollar, dollar CAD, dollar Swiss, dollar yen. And then this is the basket of all dollar currency. So every pair is taking their strength out of this feed. So whatever is happening in this dollar index is actually the effect of all the trades that all this other pair is generating. So that's the reason why I like to look into dollar index first of all. So if I pull up the charts and I'll ask you some basic little question, all right? Before we talk about the strategy that we want to discuss. This is a monthly chart, which is a very big time frame chart on dollar index. And the reason why I want to do this is if you look at the dollar index, then you should be able to tell where the direction of all the dollar pair is going, okay? The first question that I will ask myself is, okay, so this is a pair that I've done a bit of analysis on. So I'm gonna delete those analysis and start from the, before I delete it, let me save the chart image. Okay. Trade. Okay. All right. So let me me delete everything. Okay, so with my dollar index, when you look at this chart, which direction do you think this chart is going? Anyone?
It's going upward.
It's going upward. All right, so the first question you want to ask yourself is, what is the major trend? So I'll write that as empty, or let's say major trend. Oh, so this is going to end in 10 minutes. I'll try and put another time. So up, that is simple. So what that is telling you is the one thing that you want to do on dollar is you want to be buying dollar, all right, and selling other pair. So this is going upward, and it has been going upward for a very, very long time, probably from 2001 June. Okay, so if something has been going upward since June 2001, you dare not stay in the line of it or against it. You better off traveling with it. Okay, all right. And then if you want to travel with it, there is an highest point over here, which is somewhere over here. Okay, what this highest point is telling you is okay, the last time the price gets to this highest point, we encounter a sell-off. All right, so because this has been moving significantly upward, we expect that if price gets here, we might see a sell-off or a continuation. There's no doubt about that. All right, we can see that price will get here and then have a little bit of a shake and then probably sell off a little bit before continuing. And there's still another highest point over here. So this price can then find a reason to continue upward. So dollar, as you can see, is in an upward trend, and every single trade that you want to trade should be in that direction of dollar. So if you want to, until something happens, all right, which is what we're going to discuss. The second thing I'm going to ask you is, what is the market condition? All right. The market condition comes in two ways, right? And I'll explain. That market condition can be a situation whereby when you look at the price in this region, the price is neither going up nor down. All right. So if, one second. The price is neither going up or down. That is a market condition. And then suddenly from it, the price started to go down, okay? And then it gets to a situation like this where the price is neither going up or down. That is another condition. So that kind of a market condition is called consolidation, or it's called ranging market condition. So if I ask what is the market condition, there are two answers to that. Either the market is trending or consolidating. Those are the two answers you need for that. So in this case, this market is not consolidating, it's trending, which means it's going in one particular direction. It's not moving sideways. All right. So if the market is not moving sideways, that is telling you one key thing at the same time as well. That your direction remains intact. So the questions are helping you to align where your direction is going to be, which means you still want to be buying dollar because nothing has changed. So what is the momentum? Which means the rate at which the price is moving, is it increasing or decreasing? In this case, the momentum is increasing. You can see that the speed at which it's going up is increasing, which means you want to align yourself to continue to buy dollar. All right. And then now you want to look for where you're going to look to buy. Any support or resistance. All right, that is what I mean by that one. Any support or resistance. So if you want to buy, you want to look for areas of support. And then if you want to take some profit, you want to look for areas of resistance. All right. So in this case, there are ways to understand areas of support, which is not something that I will delve so much into. But when you look at here, when price goes up at this particular point in time, it comes to this level and stop, all right? And then it continued to go up, all right? Considering the price want to go up, when you look at the price was going up, comes to this level, stop, and then continue to go up. It was going up, then it moves down a little bit, stop there and continue to go up. Going up, moves down a little bit, stop there and continue to go up. So those are areas that price is using as an area of support to support itself to go up. So you have to note all those areas. So the one important area of support that price dip into before moving up again was this level. Currently, we've passed it, okay? And then we are attaining to go up higher. What that is saying to us is, if for any reason, maybe in the nearest future, price comes down to this area, we can look for an opportunity to say that, okay, this might be a good time to buy, but this on monthly chart, we will look for other support. So if we go on weekly charts, let's look for support areas now, which are the same concept which I showed you, which is going to be this area. Price was going up and then it dipped down to this area and then it continued up. Another one of it is this area. Okay, so whatever direction you're choosing is based on what price has done, not just on what you're thinking. You can see that it's moving up, it comes down to this level and then continue up, moving up, comes down to this level and then continue up. So that's your area of support. And then your area of resistance is where did price stop, okay, which is this particular area. Price was moving up, it stopped over there and then start to move down. And there's another one over here as well, moving up, stopped over here and start to move down. So now you have your key levels on another time frame, which is a weekly chart, okay? All right, so having said that, what all this level is telling you is if price is approaching any of the support or resistance, that's where usually change of direction takes place. So right now, we don't have any resistance ahead of us more than over here. So what we want is whatever support that we can get. And you can see over here at the same time, when price got here, he sell off a little bit to this low. So we've marked all those important area, and then any trend change pattern will be my last question. Any trend change pattern, which means, do I have anything that is changing the direction of dollar moving up? Currently on this chart, there is none. And how would you know? The moment price starts to dip below the previous support that makes it goes up, that is when you are looking for the change of direction. So for now, we haven't seen anything like that. And I'll make an explanation of that over here. When we were going up, considerably going up, and then we come to this level and we start to go up. The moment price dip down below this last low, that is when the trends change significantly occur. Although there are other areas where we can see it, but we haven't, I'm not going to go deep down into that for now. All right. So, but when we move below this key level, you can see that there's no going back. All right. So price continued to move back down significantly until where we are today. All right. So like I said, we won't have a trend change until we start to move below this last low, right? Which obviously there's no any trend change pattern on this weekly chart. All right. So I'll go to my daily chart. So you can see that I started from the monthly, the weekly, and the daily charts, looking at areas of highs and lows. And these areas that are specified, these are areas where you will be thinking of getting involved in the market, okay? Getting involved in the market. And this type of trading is different from day trading. Okay, with day trading, you have to capitalize on the strength and weakness of the day on any currency pair, which is something which I explained over here before you join in, Jalil. I have less than 1 minute, so